Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is CPI Live. Today, we've got one of the biggest numbers of the month, probably of the early year. I would say NFP and CPI are going to be number 1 and 2 as far as market volatility and what we can expect out of our markets. Right now, though, we are really anticipating this number. This is a big one, and the reason why is we got that hot jobs market. The question right now is what is going on with inflation? What is going on with the U.S. dollar? The dollar index is above 109. It's extremely strong. We're already pricing in a very hawkish Fed coming our way in the next few months. Right now, mortgage rates just dropped about 20 minutes ago. MBA 30-year mortgage, 7.09%. Unbelievable. We're above 7%, and we're supposed to be in a rate cut cycle. Absolutely astounding. I think we're in for an absolute light show today. So we're going to look at some strategies. I've got the 920 loaded up, the 9 EMA, and then also the 5813. We're going to scalp those. I got a few trade ideas of my own out there with some key levels. We've got a request coming in for the dollar yen. We're going to look at that. Got a key level in the dollar CAD, and we've got a lot going on. So let's just hop into it. Good to see everybody back in the room. Bobby Bob, always a pleasure. Bobby, Tom Abraham, good to see you. Raja, will it be bearish or bullish? I have no idea, Raja. No clue. No clue. I will tell you that I expect it to sort of come in as expected, but I don't know what the markets are going to do. I got a feeling that if it doesn't really blow us away, it's going to be a bad thing for the U.S. Indices today. I could see a big-time sell-off. We just got to wait. What's bullish and bearish CPI? Well, I'm going to explain it. Let's go ahead and do it. Remember, if you need a broker and you're in an international venue, Switch Markets has you covered. Plenty of things going on right now. 100% bonus and a $2 per lot cash back and an iPhone 16 giveaway. If you're interested in opening up an account, go ahead, cruise over there, open up a demo, start trading demo on MT4 and MT5. And also, if you're in the United States, Owanda is our partner broker here in the United States. Can get you up and running. You can trade crypto. You can trade the Forex pairs, whatever you want to do. So if you're in the U.S. like me, I'm in Dillon, Montana, and it's about 9 degrees outside, so it's awfully cold. But if you're interested and you're in the United States, check out Owanda. If you're international, check out Switch. Now, as far as what can we expect today out of our markets? Well, I mean, there's a lot going on. That's an understatement. This was a trade idea that we had put out yesterday. It was a near miss. That, sometimes writing these trade ideas up is awfully frustrating, and it really does get to you after a while when you miss entry points by just a few pips. It's very difficult. This was one I probably should have been more aggressive with, but we really liked the downside of this Great Britain pound Japanese yen, and the reason why was because the BOJ came out and said they may hike rates next week. I felt like it was a matter of time before the markets priced that in a big way. That's such an epic event, and right here we were looking to sell somewhere right up around 193.14s, and unfortunately we only got to about 193.03, so we missed that sell by about 10 pips, and you can see the market's absolutely plummeted since then. I thought it was a pretty darn good trade. The real question is what do we do now with the Japanese yen? Well, I mean, big picture, if we're going to look at the dollar yen with a hawkish BOJ, I'm thinking pullback. I'm thinking pullback buy. I still want to be long this pair, but I'm not interested in going along for the ride of the short-term turbulence that's going to be caused by the BOJ. Anytime we have big key events like the CPI number or the Bank of Japan adjusting their monetary policy, I've got to be really cognizant of my long-term levels. And right there, probably 155.09, maybe 155.25. That's a pretty good buy. So I'm going to be watching this dollar yen closely during our CPI release in about 7 minutes, and we're going to have an opportunity potentially to make that trade. We've also got the dollar CAD, real similar type of a situation down there at 142.60. I like bidding both of those just in case we get sort of a pullback there on our indices coming after CPI. Gold, we're watching gold closely. This is definitely a bullish pennant. We went over this yesterday. Monthly chart. Those are huge levels. You got to be aware of where these long-term zones are. Remember, markets have memories. Beware. Just take it from me. Beware of last month's high and low. This is a compressed type of an environment. 27, 29. Be watching that. Now we have a sell trade idea that's on the board. I don't think we're going to get it. I think we're going to break high. I don't want to buy above last month's high though. I don't think that we're going that much higher. I don't think we're going to hit 3,000 unless we see a major terrorist event or problems on Inauguration Day Monday. I think the hawkish Fed policy is going to keep a lid on this gold market, and a lot of the sellers sort of are dominating, really keeping a lid on what we believe is a very explosive market to the top side. Something to think about there. If you're interested, so I got behind on the live chat. Ivy, good to see Ivy. IJ, good to see Lita. Always a pleasure. Let's get right down to it. Let's go over what CPI is. We got 6 minutes, and then we're going to talk about a few different trade ideas that we may be able to capitalize on with our strategies. All right, our performance, unfortunately, we didn't quite get in there on our Great Britain Pound Japanese yen, but we still have a lot of trades. These are all the trade ideas out from this year. It's been a good start. I'm not going to lie to you. It's been a good start. I would have loved to have got that guppy trade. That would have put us over the top for early in the year, but that's okay. Right now, understand that if you're interested in any of these trading strategies to execute them today, they are higher risk. And the reason why is CPI is going to drive these markets crazy, and we don't really know which way they're going to go. Devin, good to see you. JV, good to see you. We don't really know what's going to happen, but the performance has been pretty good thus far. I'm really excited about the catching that runner in crude oil, but we've got a lot more work to do, and we're just getting going for this year. So week 2, this is a big week. CPI, that's the name of the game today. Remember, Tuesday, Wednesday, Thursday, psychology, pedal to the metal. We are trading today, and we are trading hard. If you're going to trade, trade. Be careful with CPI though. Don't let yourself get, I guess, over leveraged today. Be sure that you understand the volatility that's possible, and it definitely could see directional moves, trends, breakouts, whatever could happen. I think we move in gold today. I really do. Let's just wait and see what happens. Remember, CPI, Consumer Price Index, measures the change in the price of goods and services from the perspective of the consumer. That's all you need to know. That's it. It's just a basket of goods and services. We're measuring the change in prices to see what's happening to our purchasing power in our domestic currency. How does CPI impact the Forex? Now, here's what we need to know. If it's a low CPI number, that's bearish for the USD. That suggests that inflation's coming down. Perhaps you can get some rate cuts out of the United States Federal Reserve, inject more money into the system, perhaps. Now, if it comes in hot, that's what we're concerned about today. If it comes in hot, that's going to be bullish for the USD. That means that the Fed's going to have to raise interest rates to try to control those consumer prices and give yourself an opportunity potentially to bring about pricing stability. Remember this right now. Remember this. This is all you have to remember about the Fed and monetary policy and everything. I don't care if you're watching Bloomberg, CNBC, whatever. There's one thing you need to remember. The Fed has 2 functions. That's it. They've got to promote pricing stability, and they've got to promote maximum employment. That's it. That means they got to get people jobs, and they got to make sure they can afford loaves of bread. That's the only reason the Fed or any central bank is on this planet. Now, if we get too far away from that, then we start to see the Fed play politics, which is what we saw last September. I'm probably going to talk about that a little later today. But for right now, that's the relationship. That's how CPI affects your markets. So what are we expecting today? We're expecting everything to come in line. Remember, core CPI, a lot of people love core CPI. I don't really. Core CPI strips out energy, things like food, the more volatile pricing goods and services. They strip out and give you sort of a baseline CPI. I don't like core CPI. I believe it's a fugazi. I like CPI because CPI has the energy prices in. In my view, being a crude oil expert, energy makes the world go round. That's all there is to it. And without energy in our equation, I really don't care what the numbers say. So that's my own personal opinion. I figured I'd give it. Here's what we've been looking at CPI. Sort of seen a little bit of a plateau last spring and summer, but we really got a big time kick in October, and November sort of came down. So we're looking for a flat figure here. I don't know that we're going to get it. And remember, this is the chart that scares every economist in the world. They won't pull this one on CNBC because it really is an indictment of the Fed and how they handled COVID. But right there, you've got going back to 1950, you had sort of a really flat CPI for about 30 years till the 1980s. We brought credit cards into the equation, and then after that, the early 80s, to get out of that deep recession, you've seen CPI go up ever since, that up 45. But what really scares people, and economists especially, is what happened right after COVID, pumped the system full of money, unlimited quantitative easing, and CPI has taken off like we've never seen before in this, really going back to about 1980. But even this is steeper. We're in a bad situation with inflation. That's the bottom line. So we're watching relatively closely what these numbers are going to be. Absolutely huge. The last thing I'll say, 30-year mortgage rate came in at 7.09%. That's a huge threshold. The 7% threshold is absolutely huge. And then our CPI figures are right there. We're going to see exactly what happens here in just a second. So let me see, 4 minutes. Let me see, would the NASDAQ go up if the CPI is lower? Yeah, theoretically, yes, it would. Watching gold closely. Okay, let's look at our strategies. We've got a couple of minutes left before the number drops. This is a Great Britain Pound USD 1-minute chart. This is a 9 EMA. This is a flat 9 EMA with what? We've got RSI confirmation. I want to make sure I get my trading dome up. I had a lot of these up earlier. They just sort of got shut down. I got disconnected a minute ago. In any case, the 9 EMA, a lot of you have watched the 9 EMA video. What we're going to be looking at here with this Great Britain Pound USD 1-minute chart, We are in overbought territory. That means we're looking for a bar close beneath the 9 EMA, and then we're going to sell the market, and we're going to see exactly how that goes. That's just a flat 9 EMA with RSI confirmation. Gold on the 30-minute chart. I pulled this. This is a 920 crossover. Now, the 920 crossover, the 9 crosses over the 20. We are in overbought territory, potentially a shorting opportunity in gold on a 30-minute time frame, but we've got to get that crossover. We got to wait and see exactly what happens with CPI in about 20 seconds. And then here's our E-mini S&P 500. This is a 1-minute 5813 chart. All right, you can see right here the volatility and the action. Really watching this one closely. We want to see this market getting overbought or oversold territory, and then we're going to go ahead and look to make a trade. Okay, there it is. Ding, ding. Okay, there's our figure. What's our figure? All right there. We've got 0.2%, 3.2%. It came in a little bit. Core CPI came in a little bit lower than expected. CPI came in at 2.9. CPI came in as expected. So month over month, 0.4%, and then year over year, 2.9%. The index actually came in down a little bit from where it was reported last week. So what are we looking at right now? Okay, this is a bullish number. Core CPI is what these markets absolutely exploded on. That's going to be a bullish market driver for your U.S. equities. Why? Because inflation is showing signs of coming down. That means that potentially, at worst, the Fed will hold those rates static, as opposed to maybe having to hike them. Remember, we got a hot jobs market, and right now we've got a lot going on with regards to our jobs, but also our inflation just came in a little bit less than expected. So what would that mean for our U.S. equities? Right there, you can see that's a big-time bullish bump for the U.S. 500, the E-mini S&P 500. Nice big break. Let's take a look at some of our other pairs, and then we're going to get right back to that. Okay, right here, we're coming off a little bit. What does that mean for the U.S. dollar? We came in lower than expected, so that's going to be dovish. I love these buys. We're in position, 156.42 right there, 155. I would say 155 and a quarter is an absolutely fantastic buy in this dollar yen. Shane, that's about 100 pips off. Give it time. This one could come right to us and be absolutely amazing. Dollar yen, you've got a hawkish BOJ all of a sudden. You've got a lagging CPI. You got a shot right there. U.S. dollar, Canadian dollar. This one's coming right to us. So let's go ahead and plan on buy. I would say 142. You could buy a 142 and 3/4 if you wanted. I'm going to wait. My entry point's going to be probably 69. Right here, 142.69 with a bit of a topside shade above my support zone. Love that zone. Going to be looking probably a couple of ways you could play. You could scalp it for 10 or 15 pips, or you can take a position for 25 to 50. I would just start with a 1-to-1 risk versus reward. We're looking for immediate positive price action and a nice bounce. That one is coming our way. I like that dollar CAD. That's pretty good. What happened to gold? Okay, gold. Theoretically, this is going to be a bullish market driver for gold. Can we, in fact, break out of this triangle on the monthly? It looks like we're going to test the top side. Let's go right down to a 5-minute chart and see if we can get some scalps. Okay, that right there is huge. That's a big-time bullish break. What we want to be looking at with gold is going to be pullback buys. Now, the question is what time frame? Right now, you can get away with a 1 minute, but believe me, in about the next 5 or 6 minutes, maybe 10 minutes, you're going to want to take this chart probably up to a 5-minute chart, because the market's going to dry up before that U.S. Open. But that's a nice directional move. We went right to 2,700. There's a lot going on here in gold. I would be buying pullbacks based on that real dovish CPI print. That's bullish for gold. It's bullish for crude oil as well. Crude oil at $78, an absolutely huge market. All right here. What can we do? For me, I use Fibonacci retracements. That's my weapon of choice. I'd be looking to do something like that, buying pullbacks. The big thing is we just got to get an intermediate term top to step up. But this bid right here, right around 89.75, probably a pretty good one. Now, that's a spot gold market. You're going to have trouble scalping the spot gold market. And the reason why is you have a spread in there. So with the spread, you've got to really be careful with what you do, because it really prices away a lot of what your efficiency is. Meaning, if you've got, right now it's like the spread's 108, 106, or 108, that's really tough to deal with. See, right there's your sell-off, and now we're starting to rotate back down. That was a high-risk trade. I would say it got swept out of the box, back into this 1-minute golden zone. I don't know. The correction's on. This could be a really tough territory. We didn't quite get our trading dome loaded up, and now you can see the correction. This 1-minute bar, we're giving it all back. So let's go right here. Great Britain Pound USD. We're in overbought territory. We want to sell this thing if, in fact, we get an opportunity. But to do that, we need a price bar to close beneath our 9 EMA. And once we get that, we can definitely hit it. I know I'm moving fast, but that's okay, guys. Okay, there's your gold chart. Let's see if we can get maybe a gold trade. What do we have here? 5 minute 920. The 9 crosses over the 20. We're breaking out high. Let's go to a 1 minute. We've got to try to get in. Okay, right there. What are we looking for right now? We're in overbought territory. What we're looking for is you've got to get that 9 to cross over the 20, and then we'll look to sell the market. And I think we may, in fact, get an opportunity here. And for some reason, we're having trouble connecting to our paper trader. So, that's just the way it is. I got disconnected earlier from TradingView's paper trader. I'm not surprised at all. That thing can be pretty clunky sometimes. But right there, that's going to be our trade setup, short-term time setup. Let me see. Let's go. Got way behind the live chat. Wow, the spike in the moment CPI went out. Yeah, the volatility and the action is absolutely huge when you get a number like CPI. This could be a pretty good little trade here now. You've got gold. Okay, we talked about the Fibonacci retracements. That didn't work. You got a nice big sell-off filled in this bar. We're not trending. We're not trending. We're up about 0.5% on gold on the day. I showed you the monthly chart. It's a flat market the last month. What happens now? This isn't a bad time to be taking this trade. It really isn't. But we've got to get our 9 EMA to cross over our 20. We're in overbought territory right now. If we get that, then we take the short. Stop loss is right above that swing high. That trade right there, pretty much a no-brainer. Can we get it? I think we'll be able to get it here in just a minute or two. That's for sure. Right here, E-mini S&P 500. This is our 5-8-13. I love the 5-8-13. You can see we are severely on the 1 minute. We are severely in overbought territory with this E-mini S&P 500. Now, remember, the rules to this one are a little bit different. You've got to get your 5 EMA to cross over your center bar, which is going to be your 8, and then also price has to be beneath all 3 EMAs. So it's got to be beneath the 5, 8, and the 13, and then we're going to look to sell this thing. This isn't a bad setup either, especially going into that U.S. session. I think we're going to have a real chance here, potentially, maybe to sell some tops using these strategies. Not a bad time to be doing this sort of thing. Now, we're looking all over the place. We're looking for trades. You can see right there that 1 minute pullback I sort of outlined. The golden zone held. 38% got rocked. But that golden zone, boy, don't ignore that 62% golden zone. Probably one of my favorite levels to trade. Absolutely fantastic. Absolutely fantastic stuff. As far as a dollar CAD, are we going to get a chance? I think we're going to get a chance. Love this trade too. I think we're going to get a real shot to buy that 38%. The trend is definitely up, and the reason why it's up is because the U.S. dollar has really put on a show against the Canadian dollar because of the coming trade war. We believe that you're going to see tariffs get slapped on Canada right away with the new Trump administration. That has hurt the Canadian dollar. But right now, you've got a two-headed monster with the Canadian dollar. Number one, you've got strong crude oil. Remember, the crude oil drives the Canadian dollar, the loonie. You've got strong crude oil. $78, actually we're off a little bit, but right around $77, $78. That's extremely strong for this time of year. That's going to bring this U.S. dollar, Canadian dollar down, and then you'll have a chance potentially to buy this pullback. I'm still a believer in the DXY. I think the DXY is going to really blow, or not blow high today, but definitely going to be one to reckon with here in the near future. And right here, here's your dollar index. Dollar index on the weekly time frame. You can see that the uptrend has been voracious, I guess, since September. That September rate cut that we got, the half-point rate cut from the Fed, supposed to bring the dollar down. It did nothing of the sort. It basically told the markets that we have a real problem with inflation, told the markets that we have potentially a real problem with a recession risk. That's why the Fed cut. They were really worried. Well, they cut before the election to try to prop up a certain side in the election. Didn't work. But right there, there's no denying it. After the big rate cut, market goes to the moon. That shouldn't have happened, and it did. Right now, the U.S. dollar is dangerously high. We are really at huge levels. If you're trading the DXY, as far as what I would say like a CFD or a futures contract, I'm watching very closely. I won't even think that the uptrend in the DXY is over until we crack that 106.38, something like that. Let me see. Bitcoin for real gains. Yeah, I mean, when we're talking Bitcoin, you're absolutely right, Matthew. This was our buy. We just missed our buy. We had probably an 86 something buy, and we just missed it. We just absolutely missed it. We had a nice sell-off 2 days ago, which was the big crack. I mean, we really took that doji right there when we sold off underneath 90 and couldn't hold the water. We're up $10,000 in just about 36 hours. That's an absolutely huge rally, huge daily rally from a macro perspective. on a monthly chart is what I would be looking at if I was trading Bitcoin, something like that. We would love to buy dips. It's just we haven't got many dips. I think that Bitcoin could I mean, we're seeing projections at 250,000. Yeah, 150, 125 relatively soon. I think we could easily see that pop. It's crazy what's going on in Bitcoin right now. This was the breakout all the hodlers were waiting for. How high do we go? There's no rules. This thing could go to $500,000 or $1 million. There's no rules. There's no rules. The question is how long does that take? How long does something like that take? Team Marina, what other eco indicators cause price to react instantly like CPI, NFP? It's NFP, CPI, and a Fed release, central banking releases. That's the only thing that brings the volatility that a CPI will. Come on, we got to get a trade going here. All right, we're starting to get a little bit closer on this gold trade. Right there, you got to get that crossover, though, the 9 to cross the 20. How about the Great Britain pound? I mean, we are ready to rock here. We're ready. What's our dome? We got a real tight spread, about 1.9 pips. It's not the best spread in the world, but it's not too bad for the Great Britain pound. And our trade idea here, 9 EMA. This is as simple as trading gets, guys. You don't even have to use confirmation if you don't want. I like to use confirmation with RSI just to help me really weed out the winners from the losers here on this 9 EMA. But something like this right here, you're just looking for a close beneath that 9 EMA, 1 minute chart. And let's go right here. We've got our RSI, Relative Strength Index. Wells Wilder Jr. built this thing. I don't know if he built it on rock and roll, but he built it. And it's a decent indicator. I highly recommend not trading the RSI in isolation, though. You can get hurt really, really bad. And the reason why is when the market trends like this, you're looking to sell right back here. And oftentimes you're on the wrong side of a breakout. So you can really lose your tail in a big, big way. But if you combine the RSI with another indicator, like say the 9 EMA, you've got a real basic way of approaching the market. Market goes over 70, we're looking to sell. What's our signal? When our price bar closes beneath that 9 EMA, and we're almost there. Now remember, with a crossover, or not a crossover, but with a moving average strategy, what's going to keep you in the money, what's going to make you profitable is how you manage your risk versus reward. No question about it. This is about as tight as trading gets. We're trading a 4X pair on a 1 minute chart. So right here, if we do get our crossover, and it looks like we will, we're going to go right here. We're going to order. I'm going to go ahead and go with a market order. We're going to go with a market sell, and we're going to send them short. Where's my profit target going to be where's my stop loss going to be? Always think in terms of stops first. Stop loss, I'm going to pad, I don't know, about maybe a pip right up above this swing high. That's going to be my stop. Where's my profit target going to be? You have a couple of options, all right? You can go with a static risk versus reward. I'm a big fan of one-to-ones. A lot of people laugh at me, but it really is sort of what I've found the most consistency with. Okay, right here, it looks like we're going to get our sell. Now, we're looking to sell on the bar close beneath the 9 EMA. And remember, it needs to be obvious. Now, there's a couple of ways that we can trade it. We can go right on the bar close, or we can wait for a pullback to that EMA. We don't have to, you don't have to commit. Just be consistent with what you do. We're going to sell it just to get a trade going. Profit targets. You can either go with a static 1-to-1, 1-to-2, 1-to-3, 1-to-4, or you can wait for price to cross back over the EMA and exit. It's relatively straightforward. This is going to be our trade. So we've got our sell, our market. I don't know. Let's put a little bit on it. I don't know, 100,000, something like that. All right, now right here, 3, 2, 1. Okay, bang. Okay, we're selling. All right, there's our sell. Now, the real question is how do I manage this trade? Well, right now, what I need to get, at least for me to be profitable over the long term, is at least a 1-to-1. So you've got to risk at least a 1-to-1. So right there, our high is going to be 123.02. So I've got my stop loss up there at 123-ish, about a pip away. Let's go up to 123.04. Always pad your stop loss a few pips. I don't want anybody to get stopped out by a fraction of a pip and then see the market reverse. Our entry point was 122.82. So we've got a legitimate shot here at about what, 12 pips? 22 pips, something like that. So what would we need to do? Well, we would need to make sure that our profit target really reflects the risk that we just took. So if we're somewhere right around 180, 122.80 is where we got filled, something like that. 122.80, so 24, we've got to be down there right around, 56, something like that. So that's your basic 1-to-1 trade. Now, a couple of things we could do. Number one, you'll notice the price is moving against us and we're losing. That's the bottom line. We could have waited. We could have waited for this inch instead of entering right here. We could have waited for that pullback to the 9 EMA itself and then sold. You see that an awful lot. The problem with that is a lot of times you're going to miss your entry, meaning the market's just going to bang. It's going to get away from us, and then we're not going to have a real good entry, we're going to miss the big move, and then we start pulling our hair out and going crazy, and we go on what I call tilt. All of those that play poker or have been to a casino, you guys know what tilt is. You don't want to be on tilt. We want to have both feet on the ground and be firmly in control. Okay, now this thing's going our way. All right, now we're up 50, we're up 58, this is a legitimate trade you could probably place with real money. It's not that big of a risk. We're coming off nicely, though. We're starting to see the price action that we need to see. As far as are we even near our profit target? No, we're not even near it. 122.56, we're at 75. You got to see 75 go to give us a real chance to get this trade. And right there, what happened? The bidders dug in at 75, pushed the market up. So right now, we're in decent shape. We have an opportunity to hit our profit target here. The real question is how much should we shoot for? That's a basic 1-to-1. I like that. That's sort of what I do. What about market structure? Any smart money concept fans out there? A lot of people love that. Right down there. What about that? Pre-CPI levels? It's not a bad target either. Basically, you're betting that, okay, the big pop to the top side is over, and now reality is going to set in and the dollar is going to gain back what it lost during the CPI release. Is that viable? Is that possible? Of course it's possible. Is it probable? Well, for me, I think it's possible. We just got a huge spike of volatility, and now we're getting the retracement. It's not a bad trade. As far as trade management goes, I'm a big fan of really just taking the risk and letting these things play out. You can see right there, it's not easy. It's dirty. We're up, we're down, we're up, we're down. A lot of people, though, they'll wait for that to cross back up over that 9 EMA, and then they'll just exit right there. They'll say, well, the move's over. I don't like doing that. I like that initial trade, bang, bang, build it, and then see what you got. Build your build your stats from there, your success rates, your profitability, everything. At least if you do it that way and stay static with it, you have an opportunity potentially to come up with some concrete tendencies and maybe build a pretty good strategy. Your risk versus reward will determine how good or how profitable you are with these strategies, especially moving averages. That's the name of the game. Let's see, gold. What do we got on gold here? What do you got? 1 minute chart. This is a good, okay, right here. So you've got the sell right there. You're in overbought territory, so you're looking to sell this thing. Did we get the 920 crossover? The 9 crossover the 20? No, we didn't. That's key, guys. Remember, that's what these strategies are for, is to keep you out of trouble. What happened? Oversold. We're looking to sell, sell, sell. We've got to get the 9 to cross over the 20 to sell. We didn't get it. Price is blowing up in our face. We're still watching. If we get a definitive move, then we can do it. We can take the sell. And the beauty of a strategy like this is your initial stop loss would have been up here if it had the 9 cross the 20. Well, look where it can be now. It could be somewhere like right in there. 9 crosses the 20. You're looking to take the short. Not a bad trade. All right, E-mini S&P 500. This is instructive of what happens to the futures markets after a big economic release. There's your big bullish break. All right, there's the huge flood of volume into the market. And then what happens? Things are just sort of tapering off right now. We're grinding higher. I don't think you're going to get another move in equities until about 45 minutes from now, until you get that U.S. Open. And then you'll see the big correction potentially. I don't think the markets are buying this number. I would be surprised if I think we're going to close flat, potentially negative today, just because that bottom line CPI number came in as expected. The core CPI number down slightly. I don't see this as being a huge market mover to the top side. All right, guys. Well, that's where we're at right here. You see this Great Britain pound USD trade. Very, very trying. We'll see exactly how this thing pans out. Will the dollar make a rebound today or won't it? As far as what we can be looking at otherwise, dollar CAD, love that trade. That's a pretty darn good one. Bitcoin, God, we'd love to get a pullback in Bitcoin. I just don't think we're going to get it. As far as the dollar yen, though, this probably is going to be one of the trade ideas that's coming out a bit later today. So I'm going to go ahead and release that in a few hours, potentially after the U.S. Open. We're going to wait and see exactly what happens on the U.S. Open and for the dust to clear and what the dollar does. Other than that, that's a wrap. Now, remember, we're going to be back on live here in about an hour in the How to Trade trading room. So come back. We're going to be trading some real tight time frames. We've got that 10-minute trading blitz I like doing those, and we'll be trading 15-second charts on some futures contracts about a half hour after the U.S. Open, and we will be targeting. We had a question about the NASDAQ. We're going to be targeting the NASDAQ. We're going to be looking at gold futures and also potentially crude oil futures, but more than likely we're going to be looking at the E-mini, not the E-mini, the Euro FX. We're going to be looking at the Euro FX futures. So it's going to be a futures stream. Should be pretty fun, so you guys come on by. Right now, we're sort of watching our Great Britain pound trade. It's floundering. We still got some room to work. We'll see if we get that follow through, and really that 122.75 level has got to go. If it doesn't go, we're in big trouble on that trade. Right here, though, you got your CPI numbers. There they are. For me, the biggest number of the day is this. Where is it? Come on, where is it? Yeah, we just missed it. Right there. 7.9%, 7.09% on the 30-year mortgage rate. That's a big deal. All right, everybody, like I said, back in about an hour with the 10-minute trading blitz. Look forward to seeing everybody there over at howtotrade.com. Go open an account, jump in the trading room, ask me any questions you'd like. Send me a PM. I'll get back to you as soon as I absolutely can. All right, guys, that's a wrap. We'll see you in about an hour. Trade the action well. If you just made a pile of money on CPI, don't give it back. Take some of it home. Take half of it home with you. If you got a big win and you scored big right there, take some money home. U.S. Open's going to be turbulent. I think you're going to see whipsaw action, so be very, very careful. Remember, the positions that you have on now may or may not work through the U.S. Open. All right, guys, that's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.